Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is September 30th edition of Market Outlook. So please don't forget to participate in our trader survey, and we'll send you the results about the sentiment of our traders. So far, the indicator has been proving to be fairly interesting. We do a slightly different take on it than most because we're measuring your sentiment over a different time frame. So we're going to have some interesting data over time to compile and share with you. And again, the more that participate, the better off we are. And so sign up for the newsletter, get this free thing weekly. Delivered to your inbox, and participate in the survey. So this week, a week of correction and digestion. Lots of news with Apple and markets sort of digesting QE3. So let's take a look at some of the key averages. First of all, on a weekly basis, looking at the Dow, you can see that we've had this upward channel here, which we basically penetrated and moved back into it. So you're sort of trading still within this bigger channel, sort of a pennant type formation. What we want to be very cautious about is this accelerated trend line here, because if we fail this trend line, it looks like we have a pretty good chance of getting a bounce off of that, which I'll get into in a moment. But if we fail that, it looks like we'll be vulnerable to testing the bottom of this rising pennant and getting through that rising pennant. If we failed here, yep, we do have that 65-week moving average on the weekly as another point of support, but it would be pretty suspect. On the other hand, everything looks pretty much well intact, and we're just trading along nicely within this pennant. We'd like to see, obviously, this thing to hold a little bit, just a little bit beneath here or right around here. On a overbought, oversold basis, you can see we're in sort of the middle of the range, so we're neither overbought nor oversold. Going down to the daily charts, you can see very, very similar. We drew in this channel, but on the dailies, we didn't close above it a couple days. Had a doji day on Friday, indecisive. And again, here is this rising channel. Interestingly enough, on the Dow, which is DIA ETF, is that we do have a rising 50-day moving average coinciding with this trend line. So we really, really want this thing to hold support around the 131.75 to 132 level. And basically, this pattern here, tracing out the explosion after QE3 and the correction, traces out pretty much what's happened through some of the other quantitative easings and other Fed movements. So the spike up, the correction sideways to slightly down is fairly normal. Again, if this thing continues to break through, it would mean a significant change to how the markets have responded in the past to further easing by the Fed. Let's take a look at sentiment. Sentiment indicators basically still extremely positive. We got a bit overdone on the sell-off to the upside. A little bit of fear crept back into the market. But if you look at this, the Bollinger Bands here you're sort of right in the middle of the Bollinger Band, back under that 50-day moving average, under the 200-day. Sentiment is still firmly positive without it being excessive. So that is definitely a bullish reading. Now, interestingly enough, let's take a look at the McClellan oscillator. You can see we got overbought, pretty much right on target, right on the highs, and just missed getting a fully oversold reading down here on the correction. But nonetheless, I would call that close enough for government work. So if we get a If we get a rally, wouldn't be surprised. Over the last couple of weeks, we've worked off the initial euphoria off of QE2, sell signal on the intermediate term basis, generating close to buy. Maybe you get another spike down here, but looks to me like we're bottoming. Now, another good piece of news is that we're at oversold readings on the shorter term. So advanced declines, we're at a level that would generate, if it hooks back up at all, a buy signal. Now, also interesting to note that up-down volume is also approaching the oversold demarcation. So a hook up would get the confirmation almost exactly at the same time, both for advanced declines and up-down volume on the shorter term. So looking as to where we are, could see a little bit more downward movement. Now remember, things can always get more oversold, so until we hook up here on the shorter term, you don't have a short-term buy signal. But the way things are setting up, and also in accordance with how markets have acted with QE, the other quantitative easings, I wouldn't be surprised to see maybe a little bit more on the downside, but overall we're setting up for a buy opportunity. Let's take a look at gold. You look at the daily chart, you can see I put in an accelerated trend line. We had what we would call a potential reversal pattern, which we then promptly broke through, and then yet generated a sort of this little island down here. So that's an interesting formation along with an inside day. So you're at a very, very interesting point here where you've got obviously a breakout in the gold market. You actually over the last week, which I had pointed out earlier, I believe in last week's outlook, that we got a cross on the 50 to 200, a golden cross at this level. At the same time, you then broke that accelerated trend line, and now an island bottom. So I would be inclined to look at the low on Wednesday, which is I think around 168 or so, and the recent highs as a consolidation and a trading range. If we break through that low of last week, I would be, for shorter term players looking to capitalize on a drop back down to this rising 50-day moving average, and definitely look for support around this 160 level. Now that's a pretty 162 as where the 50-day is. So you're looking at a pretty sizable drop in gold bullion. That would be the equivalent of about $80 or $90 an ounce. So that would be an interesting buy opportunity. Now, on the flip side, we break out through the highs. You got enough compression to take this out to possibly test all-time highs. Now, again, we're neither overbought nor oversold, so that's pretty interesting right there. Now, what we do have again is gold touching its long-term uptrend on the monthly charts. Let's take a look at this. Right, so you're back to touching that monthly moving average, if we can, monthly trend line. So the question is here: is this a return move, a test, and a potential sell-off before a resumption to what looks like to me going out to all-time new highs? So let's watch that the daily pattern. We talked about that a moment ago, and play the breakouts from that 2-week consolidation or so that we had pointed out. And again, we're not either overbought or but we're getting fairly rich, but still got plenty of more room to the upside. And the thing to remember is obviously the relative strength index when you're breaking out to new high ground or new territory, can get much, much more overbought and stay overbought for long periods of time. So you really need to be able to time your way in on the shorter term charts to take advantage and not stand in front of a freight train where, you know, markets can continue to accelerate to new highs and blow out those RSIs for extended periods of time. All right, let's take a look at TLTs. As you can see, TLTs also in an interesting spot. You've got a downward sloping 50-day. You've got a very valid trend line, right? You got a high here, a low here, a lower high here, and yet a new low. And everything is coinciding right around that 50-day moving average and the trend line. As you can see, the longer term weekly trends very, very much intact. So we really would need another test of these lows, a break of this rising 65-week moving average over here to have this potential top that we've been looking at really play out. On the other hand, you're at a volatile point right here. If you break through this trend line and the moving average, again, you would have to defer and play to the long side in anticipation that the weekly and the monthly and the long-term trend is still intact and reasserting itself. So again, this short-term pattern here, watch this very closely because it's going to be a tell probably which the next significant direction is going to play out in. All right, let's take a look at Apple. And we'll just take a look at this daily chart here. Interesting, you had an inside day on Apple, so a breakout is really very, very a very interesting play here. As you can see, we're neither overbought nor oversold. We did have some pretty good volume to the downside when the news came out about only 5 million iPhones sold. Disappointing relative to the whisper numbers that we're expecting even more. But more importantly, I think the shadow about over Apple regarding the Google Map app faux pas, as well as the riots that were mentioned earlier in this newsletter. So you have a very interesting scenario here because a breakdown of this 2-3 day pattern would bring us to a potential test of the Bollinger Band and that 650. That's really an important level to hold. Now, the other thing to note, it's interesting, as the market was getting over 700 and making new highs, the volume started to trail off. And in fact, some of the better volume numbers actually have come in on the downside. So let's watch this here. This is a very interesting spot. It's possible that you're starting to trace out a potential head and shoulders type pattern. On the other hand, if we can get above this, the recent highs, actually Thursday's highs, after this inside day, it could power at least another rally to the top, to the recent highs. But meanwhile, you're also, just wanted to point out that you have this sort of reversal pattern playing out here where the market made new highs, closed on the lows, and then proceeded to sell off. So this is one of our classic slingshot patterns. So that wraps it up for this week. Hope you enjoyed it. Again, don't forget to follow up and take that investor survey, and then we'll be happy to share those results with you. Have a great weekend. Stay frosty because we're certainly at an interesting point here in the markets, and this sell-off is interesting possibility to get an entry into the market should that short-term patterns play out and indicate that we should do that. So Bye for now, and see you next week.